make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
Welcome, everybody, to the Peter Schiff Show. You know, it's been a while, a little over a week since I did the last podcast. It was on a Thursday night. A lot has happened since then, so I got a lot to talk about. But, you know, by the way, since I recorded that podcast, I actually have done 2 podcasts on the Schiff Gold YouTube channel, something I hadn't been doing in the past, but I started to do it recently. So if you don't subscribe to the Schiff Gold YouTube channel, make sure and go subscribe after you finish listening to today's podcast so you don't miss any of those. Because sometimes if I'm not doing my main podcast, the Peter Schiff Show, I may be doing the Friday Gold Wrap, which is a podcast that was done by other Schiff Gold employees for a while, but now I'm doing it myself. And so make sure to tune in. Although I am leaving Puerto Rico tomorrow morning for my annual summer break. You know, my younger kids are off of school, and so we leave Puerto Rico for a couple of months. And during that time, I will not be doing any of the Friday Gold Wrap podcast. So you should still subscribe, because when I get back in August, kind of mid-August, I may do them every week. So if you want to get more Peter Schiff, and you don't want to necessarily wait for the main podcast, you'll be able to get, another podcast on the Schiff Gold website. I will continue, however, to do my regular podcasts while I am on vacation, but I'm not going to do these new ones at Schiff Gold. Anyway, it was a big week in the markets, and it was a bad week for U.S. financial markets across the board. It was another sell America week, and I think we're going to have a lot more weeks like this one. In fact, if you remember, when Trump first won and everybody was talking about the Trump trade being buy America, I was one of the few people that said, no, the Trump trade was sell America, because I understood the ramifications of the policies that Trump would be pursuing, and the markets are reacting exactly as I had expected them to react. The star of the week was gold. Gold rose more than 5% on the week, I think 5.25%. It closed just below 33,360, I think 33.58. But what's significant about that close is that it's the highest weekly close ever. So it's not the highest price ever. It's not the highest close ever. But on a weekly basis, it is the highest close ever. So this is a powerful bull market that is going much higher. But good day across the board, or good week across the board for precious metals. Silver rose 4% on the week, closed just under 33.50. Gold silver ratio still about 100 to 1. You got to buy silver. Schiff Gold, they're standing by to take your orders for some silver. You're going to look back and kick yourself if you didn't buy before the breakout. But it wasn't just gold and silver. The whole precious metals complex did well. Platinum and palladium now back above 1,000. Platinum is above 1,100. In fact, one day last week, platinum rose by more than 5% on the day. So these other precious metals are waking up from a slumber. And, for most of my adult life, platinum was more expensive than gold. Now you could buy 3 ounces of platinum for every 1 ounce of gold. I think platinum has got to make up for some lost ground. I mean, maybe it's not going to be more expensive than gold again, but maybe it will. But it's not going to be because gold goes down. It's going to be because platinum goes up. So platinum, I think, we've got platinum coins in bars. A lot of people forget about platinum. It's kind of like, the unloved stepchild of the precious metals market because it doesn't really have the monetary history that gold and silver have, but it's still a valuable precious metal. It's still a store of value, and it's really cheap. And from an investor's perspective, you want to buy stuff when it's cheap. Platinum's cheap. So don't forget about it next time you're talking to the representatives of Schiff Gold. Don't forget to ask about some platinum. You might as well add some to your precious metals portfolio. Now, while the precious metals were going up, the dollar was going down. The dollar index down 2% on the week. It closed at just above 99, the lowest weekly close in over 3 years. So it's not the lowest close of this move because remember, one day we got below 98. We were trading at 97, but we didn't close there. But that is the lowest the dollar index has closed in over 3 years. And in fact, as I'm watching the dollar trading tonight, it's down about another 20 basis points. Now we're with a 98 handle. 98.9 is where the dollar index is. In fact, the euro is now back at $114. Its peak was 115, but it was only there for about a nanosecond. But it's a very, very strong uptrend in the euro, and not just the euro. I mean, the dollar is weakening across the board. Pretty much every currency in the world is rising relative to the US dollar. And I expect that trend to not only continue, but to accelerate. Now, while foreigners were selling their dollars and buying gold, they were also selling US Treasuries. Treasury market got clobbered. We closed above 5% on the 30-year Treasury, 503. I'm looking at where it is right now, about the same, 504, up a notch. That was the highest close for the yield on a 30-year Treasury in about 2 years. So not since the Fed first started aggressively tightening, at least in the mind of the market. It was never really aggressive. But the Fed was hiking to fight inflation, and the yield got up there. And now we're all the way back up there. The 10-year also closed above 4.5%, 4.51, and that's exactly where it's trading right now. Remember, though, these are the yields, 4.5 on the 10-year and 5 on the 30-year. That's what caused Donald Trump to pivot and surrender on the reciprocal tariffs. He called them off and instituted a 90-day pause because the bond market was getting yippy, which was the word that he used to describe it. Well, it's yippy-yappy again. What's he going to do, right? In fact, he's actually doing the opposite because on Friday, one of the reasons that the market sold off on Friday, although it should have sold off a lot more, maybe it's a situation of the boy who cried wolf, except it's the president who cries tariff. But on Friday, Trump posted on Truth Social that he's not getting anywhere with the Europeans who were supposedly lining up to kiss his ass to make a deal. Now, apparently, there are no deals. And he threatened to impose 50% tariffs across the board on Europe starting June 1st. And the markets, went down, but not that much. And so maybe the markets realize that this is all a bunch of nonsense. I mean, maybe Trump is just trying to manipulate the markets by coming up with these posts because he's already walked it back. At least his administration over the weekend kind of walked back that, escalated rhetoric. But, supposedly if this is just, a bargaining chip again, they're saying, look, Trump is just trying to force the Europeans to the table to make a better deal. And so he's threatening them with 50% tariffs. Look, if the markets have figured out that he's all bark and no bite, that these are just negotiating positions, well, then the Europeans know it too. Maybe everybody knows that this is just Trump being Trump. He's going to pound the table and talk about these huge tariffs, but all you have to do is ignore him because he's not going to actually impose them. Anyway, but getting back to what happened on the week, stock market also down. The S&P was down about 2.5%. So it was a trifecta. Stocks down, bonds down, the dollar down, and gold up. And this is a big deal, I think, when you see this happening, because I've been talking about this for a long time. When people say, hey, Peter, how are you going to know when you're finally right? Well, I said, well, when you start to see all these U.S. assets going down simultaneously and gold's going up, that's a pretty good sign that the world has figured out what I have been warning against. But let me talk a little bit more about what happened to get, the week going. It started really on Friday night. And this was the day after I did my podcast last week, so I didn't know about it. And in fact, it happened after I did my Friday gold market wrap for Schiff Gold. So I didn't speak about it on that podcast either. I did speak about it on the one I did this Friday. But Fitch became the third rating agency to downgrade the U.S. government's credit from AAA. Now, they weren't the first, because the first was the S&P. S&P downgraded in 2011. And the government immediately retaliated, kind of punished Standard & Poor's for doing that. And so I think other agencies were reluctant to follow suit. And Standard & Poor's hasn't downgraded again. They just did one downgrade. But they should have made several more. But Fitch eventually downgraded. And now you have Moody's. Of course, the only thing that should be a surprise about the Moody's downgrade is that it took them so long. But the other thing that, makes no sense is that the downgrade should have been more. They didn't downgrade enough. In fact, Moody's had the U.S. on negative credit watch for a while before they actually downgraded. And now they upgraded it to stable. Well, why should it be stable? I mean, it should still be on negative because, we're in a lot of trouble when it comes to debt. But what's really interesting about this is that in 2011, when S&P downgraded U.S. Treasuries actually rallied on the news, believe it or not. And I remember at the time thinking how ridiculous it was. But the rationale for the rally, because the stock market tanked, right, on that day. But the rationale for the rally was, well, treasuries are a safe haven. So this is a risk. And so investors reacted to the risk of a downgrade of U.S. Treasuries by buying U.S. Treasuries, which seems so ridiculous. It's like you react to a fire by running into it instead of away from it. I mean, if the problem is that U.S. Treasuries are riskier than you thought, why would you then buy U.S. Treasuries? That shows you how irrational it was that Treasuries were looked at as a safe haven, even from themselves. So if you're worried about the credit quality of the United States, if you're worried about U.S. Treasuries, then what do? Well, then you buy U.S. Treasuries as a safe haven from your worries. That, again, how completely ridiculous it is. But investors were trained like a Pavlovian dog. It doesn't matter. If there's a crisis, doesn't matter what the crisis is, you buy Treasuries. So even if the crisis is in Treasuries, you still buy Treasuries. Well, what a difference about 14 years and 30 trillion in debt makes, or whatever the debt is increased, or not, maybe 20 trillion, because Treasuries did not rally on the Moody's downgrade. They went down. So I think one of the most significant developments really this year is that Treasuries have moved from a safe haven to a risk asset. I mean, that was evident after the Liberation Day announcement, when Treasuries got killed along with stocks. And I've said this for a long time, that eventually the only safe haven left standing was going to be gold. And gold is the only thing that really rallied during that initial a week or so of collapse. Investors went into gold. Now, of course, they also went into the euro and the Swiss franc and the Japanese yen. So the dollar also lost its safe haven status. So the dollar is now a risk asset. Treasuries are now a risk asset. And this has profound implications for the financial markets. Because what I've been saying all along is if the risk is inflation, then you can't buy treasuries as a hedge against inflation, because treasuries are the victims of inflation. Treasuries are one of the riskiest things you can own if inflation is going to go up. I mean, all bonds, not just treasuries, but any fixed coupon bond with a fixed maturity gets destroyed by inflation. So when inflation becomes the risk, there is no safety in treasuries. The safe haven is gold. And of course, the other risk is default, which is the creditworthiness of the United States. If the creditworthiness of the United States is being called into question, and obviously, even though the Fitch downgrade is too little too late, it still is significant in that it acknowledges that the U.S. credit quality is deteriorating. And yes, it's actually a lot lower than the rating agencies claim. But I think you have to read between the lines and realize the politics of it. And the fact that we've been downgraded at all is a warning sign. And that is part of the reason that you're seeing this sell-off in U.S. assets and anything denominated in U.S. dollars. We got a quick commercial break. We're coming right back, so don't go anywhere. Got a lot more to discuss. All right, so I'm talking about the Moody's downgrade of U.S. credit. Again, as far as I'm concerned, it's all junk bonds. If you buy U.S. Treasuries, you have no chance of making any money. You will lose for sure. The only question is how you're going to lose. You're either going to lose because the Treasury defaults, and that is a real possibility. I would say it's a lower possibility. Although if you happen to be in China and you own U.S. Treasuries, I'd say it's a pretty high possibility. We've already floated that trial balloon. But either the government defaults and they don't pay you, or they pay you by printing a lot of money. And the money that you get paid doesn't buy you very much. So either you don't get your dollars back, or the dollars you get back don't buy very much. But either way, you lose, right? You are guaranteed to lose. So what kind of credit rating would you put on a debt instrument where you're guaranteed to lose, right? I mean, what's the even point of rating it, right? It's all junk. But, after the announcement came out, I saw interviews with Treasury Secretary Scott Bessent. What do you thinking here? And he blamed the whole thing on Biden. He said, well, this is the result of Biden and what happened over the 4 years of Biden, which is ridiculous because part of it has to do with what happened for the 4 years under Trump the first time, right? But Moody's, in their downgrade, they cited why they were doing it. And they specifically mentioned the extension of the Trump tax cuts as a reason for the downgrade. So how are you going to blame that on Biden, right? And of course, the big, beautiful bill is producing, according to its own estimates, which are going to be low. They always are. But the biggest deficit projections in history. And in fact, over a long period of time. And the current budget that we have, as a percent of GDP, the deficits that we're getting, there's only been 2 times in history where the projections, not reality, what they think is going to happen, what's actually going to happen is worse. But there's only been 2 times in history when Congress proposed deficits that were a greater share of GDP than the ones the Republican House just voted for. One time was the COVID year when we lost our minds fiscally, and we were just printing money like crazy and giving money out like Cracker Jacks. So there was COVID year 2020. And then World War II, when we were completely mobilized, fighting a world war, fighting the Germans, fighting the Japanese, right? I mean, under those circumstances, we proposed a debt this high. But of course, we were much more solvent when we did it. And so now we're proposing this massive debt when we're already broke. So does Scott Bessent think that none of that has anything to do with the downgrade? You know, had the House Republicans been passing a bill that actually reduced the debt, that actually rolled back Biden era spending, if it was an actual bill to cut government spending, I think that the downgrade wouldn't have happened. They would have said, aha, Congress is finally doing something to defuse this ticking bomb. But because they made it obvious that they're just going to, add some more gunpowder to the bomb so that when it goes off, it's a bigger explosion. I think at that point, Fitch said, okay, we might as well downgrade because there's no hope, right? Even with Trump, even with Elon Musk, even with Doge, it was all talk. It's business as usual. It's the biggest deficits ever because no Congress wants to reduce spending that a prior Congress enacted. And of course, whatever Congress follows this one, it's going to be even worse. It's never going to change until we have a crisis. The good news is a crisis may not be that far off. It could happen very soon. Of course, the bad news about a crisis happening soon is that it's going to be blamed on Trump. And I already said this before he was elected because the media has framed it wrong that Trump inherited a great economy, a pristine economy, and he destroyed it, right? With reckless spending cuts and tax cuts for the rich and tariffs, which, tariffs are a bad thing. I'll have to give the Democrats that. But they're going to be able to frame this as Trump wrecked a great economy when he didn't wreck a great economy. The bubble happened to pop while he was president. It could have popped while Biden was president. It could have popped while he was president the first time. It could have popped while Obama was president. The only reason it didn't is because we managed to kick the can down the road, allowing the bubble to get bigger. So somebody is going to get stuck, like, a game of musical chairs. At some point, the music stops. And if it stops when Trump doesn't have a chair, well, then he gets the blame. But the problem with Trump getting the blame, it's going to be the same problem as when Bush got the blame for the financial crisis. It's going to be capitalism and free markets because that's what Trump is associated with. And so the Democrats are going to say, you see what happens when you have these Republicans cutting regulations, letting business run rampant, cutting government spending, doing all this stuff, you wreck the economy. And so this is proof that we need more socialism, that we need more government control, that we need less freedom, right? Because freedom leads to collapse, right? It leads to, capitalism run amok or whatever they're going to be talking about. So this nonsense to say this is about Biden, this is very much about Trump. Because there was some expectation when Trump was first elected that they were going to do something about the debt. I remember a lot of people that were closing their accounts with Euro Pacific, my asset management company, in the fourth quarter of last year were saying, well, I'm not worried anymore. The dollar's going to go up. We're going to pay down the debt. This is great. And I kept saying, no, we won't. None of this is going to happen. This is the same stuff that Trump talked about the first time. Fool me once, shame on you. Fool me twice, shame on me. I wasn't fooled. I expected what's happening to happen. But a lot of people drank the Trump Kool-Aid and, bought, into this nonsense. Well, everybody can tell now that it's not true, right? We had a rally in the dollar early in the Trump presidency. That's gone, right? Because all those expectations were false, right? Trump is just doing what he did during his first term, only worse. The big, beautiful bill that passed the House, of course, it hasn't passed the Senate yet. It might get it even uglier in the Senate, we'll see. But this is worse than the original tax cuts because one of the offsets was the cap on the SALT deduction. That's gone from 10,000 to 40,000. They had it at 30, but they had to crank it up to 40 to get a few Republicans from blue states to come along. And so that loses revenue. But you also have the no tax on tips, no tax on overtime, which are going to be exploited. They tried to, find some ways to prevent people from, reclassifying income as tips or overtime, but it's going to happen. There's no way to prevent it. Just like the PPP loans and all that nonsense. So this is going to cost the government a lot more money than they think, even though you still have to pay Social Security taxes on your tips and your overtime. You just don't pay income taxes. They didn't go with no tax on Social Security benefits, but they did come up with like a $4,000 increase in their standard deduction for people on Social Security. So it's kind of like a roundabout way to increase Social Security benefits at a time when we're already broke. But so this big, beautiful bill not only doesn't put us on a different course when it comes to the debt, we stay on the same course. We've just stepped on the gas. So we were on a path to a debt crisis and a dollar crisis. We're staying on that path. We're just driving faster. So we're just going to get to that destination quicker because we elected Trump. Now, of course, had we elected Kamala Harris, I'm sure that whatever budget they would have come up with, assuming the Democrats, came in with her and she had both houses of Congress, I'm sure that their deficits might have been even bigger. Not because of the tax cuts for the rich, but because of more spending. So we still would have stepped on the gas. That's what every president does. Nobody ever steps on the brakes when it comes to a deficit spending. They're always going for the gas because that's what the voters want. There's an election coming up, right? In 2 years. There's always an election in 2 years. And that's what Congress is thinking about. And that's why they never want to cut spending, but they do want to cut taxes. And so we have these massive deficits. And this bill, again, is being marketed as a tax cut. The big, beautiful bill is not a tax cut. It is a tax hike. Why is it a tax hike? Because the government spends more money. Government spending is taxation. That's what the government exacts from the private sector. Whatever the government spends, it has to take from the private sector. So that spending is the tax. Now, how do we pay for it? Well, we can pay for it with income taxes, sales taxes, tariffs, Social Security taxes, or we can pay for it through inflation. How do we pay for it with inflation? They run a deficit. So they cut our taxes, but they keep spending money. And so where do they get the money if they're not collecting it in taxes? Well, they either borrow it, which drives up interest rates, or the Fed prints it, which drives up prices. But we either pay with higher interest rates or higher prices. There is no free lunch. We don't get government for nothing. We pay for all the government we get. The reality is the cheapest way to pay for government is with legitimate taxes. But the more expensive way is the way we're going to do it. So by substituting higher interest rates and higher inflation for income taxes, right, we're actually going to pay more to support the government than had they taxed us honestly. But the reason they tax us dishonestly is because people don't know they're being taxed. They blame inflation on the greedy businessmen, on price gouging, right? They don't accept responsibility for that inflation, but that is how we're paying for the tax cuts. So it's disingenuous. I said that when Biden was president, when he said, hey, we're not going to raise taxes on anybody who makes less than $400,000. And I said, yes, you did. You raised the inflation tax. That's how you taxed the middle class and the poor. You taxed them through inflation. And Donald Trump is borrowing a page from the same playbook. Donald Trump is going to tax all the people he claims he wants to help through inflation. And the inflation tax is going to do more to destroy the real value of their incomes than the tax cuts are going to enhance the value of of that income. Now, another thing that happened on the week, again, was ending the week with the tariff talk, 50% on Europe, which, by the way, would be higher than the taxes or the tariffs we have on Chinese imports. So if the China, right, if they're our enemy, right, if the real purpose of tariffs is to get China, why should we have higher tariffs on European imports than we do on Chinese imports? I mean, is Europe our enemy now too? Is that what Trump was trying to say? But probably the most ridiculous tariff story of the week was Donald Trump warning Walmart not to raise prices because of the tariffs. He said, I'll be watching you. You better not raise prices, right? Like as if Donald Trump controls the economy, right? It's like one big company and he's the CEO, like it's, his own company. And he's like telling Walmart not to raise prices. But here is what's ridiculous, so ridiculous about this, because Donald Trump, when he was running for president, he said, oh, I love tariffs. Tariffs are the most beautiful word in the English language. It's my favorite word. Maybe it's his favorite word because he doesn't even understand it. He has no idea what tariffs are. He doesn't know who pays them. He doesn't know the purpose. He just thinks it's free money. He thinks it's external revenue. He thinks he can tax the rest of the world and let Americans off the hook. So anyway, so the tariffs are imposed. Walmart has to pay the tariffs, right? When Walmart imports goods, especially from China, right? Because it's got 30, 40% tariffs on China, right? Depending on the goods, but at least 30% on whatever's coming in from China. Walmart sells a lot of stuff from China. Walmart works on low margins, right? How does Walmart make a lot of money? On volume. I don't know what their margin is, 2%, 3%, 4%. It probably varies, but it's very small. That's how they have these everyday low prices. But they make their money on volume. They sell a lot of stuff with a low markup. Now, the Chinese stuff goes up by 30%. How is Walmart going to eat that? They would lose money on every Chinese product they sold. So if they don't raise prices, they're going to have to stop selling the goods, because Walmart is not in business to lose money, right? They're in business to make money. And if Trump is going to ask them to eat the tariffs, he might as well tell them to eat their rent and eat their labor costs and their healthcare costs and their insurance costs and eat everything and just lose money, right? The tariffs are a cost of doing business. They have to pass them on to customers. That's what businesses do. But the irony of it is, that's what tariffs are supposed to do. Trump wants Americans to buy domestic goods. He wants to use tariffs, at least this is what he claims, to reduce our trade deficits. Well, how do tariffs do that? Tariffs make imports more expensive, right? You put the tariff on the good on the way in, and the importer has to raise prices because he had to pay the tariff. Now, the consumer looks at this higher price good and maybe decides not to buy it. Instead of buying that good, he buys a domestic alternative that was more expensive than the import before the tariff, but because the tariff raised the price of the import, now the domestic product is the better deal. And so you switch from buying the import to buying the domestic product. But what is it that makes you switch? It's the higher price. Now, so Trump imposes a tariff that supposedly is going to make Americans stop buying imports, and then he yells at Walmart if they raise their prices. Well, that defeats the whole purpose of the tariff. Walmart is supposed to raise prices. That's what the tariff is designed to make Walmart do. If Walmart doesn't raise prices because of the tariffs, then consumers aren't going to stop buying the imported products. Why should they? The price hasn't gone up. So the consumers will keep buying the products. Walmart will just lose money selling it to them, right? But you are destroying the very purpose of your own tariff. You know, it would be like the Federal Reserve raises interest rates. and then tells all the banks, you better not raise your interest rates. You better not raise your prime rate or your mortgage rates just because we raise rates. The reason the Fed is raising rates is to force the other banks to raise their rates. The Fed is trying to tighten. So by charging the banks more, the banks have to charge their customers more. That's the whole point. Well, that's the same thing with a tariff. You're imposing a tariff so that higher prices will change consumer behavior, causing them to buy fewer imports. Well, then if that's the case, how is Trump going to get upset? Because businesses did exactly what they're supposed to do. The reason is because he lied to the American public about the tariffs. He said that foreign countries are going to pay the tariffs. Well, if that was true, if foreign countries were paying the tariffs, then Walmart wouldn't have to raise prices. The reason Walmart has to raise prices is because the foreigners aren't paying the tariffs. Walmart's paying the tariff, and Walmart has to raise prices to get that money back. So Trump doesn't want Walmart to show the voters that Trump either was a liar or doesn't understand how tariffs work. But this is exactly what I said at the time that Trump was proposing it. And again, so many other Republicans that should have known better just stood behind the president, even though this stuff was nonsense. And some of them said, well, he's not really going to impose these tariffs. He's really a free trader. He doesn't believe in tariffs. He just wants to use tariffs to get other people to lower their tariffs. But that was pure BS. And of course, if that was true, right, we're going to negotiate with people and Trump doesn't like tariffs and he only has the tariffs as a bargaining chip. Then what kind of bargaining chip is that? Because the other side knows that all they have to do is call our bluff, right? And we'll cave, which is kind of what we did. But the whole thing is nonsense to watch this playing out. But, where I really feel bad is not just for Trump, but his cabinet, right? Where guys have to defend this nonsense. Like I was listening to, again, Scott Bessent, Treasury Secretary, and somebody asked him, I think it was Bloomberg or something, about the weak dollar and the dollar going down, right? And does this concern you? Or are you worried about the dollar going down? And Bessent said, no, I'm not worried because the dollar's not really weak. All these foreign currencies are strong. And so he went over what's happening in Europe and what's happening in Japan. And he said, see, it's not the dollar weak, it's these other currencies are strong, which is nonsense because they're two sides of the same coin. When you talk about currencies, it's on a relative basis. So if the dollar is weak, then the euro, the yen is strong. If the euro, the yen is strong, the dollar is weak. It doesn't matter how you want to describe it. It's a seesaw. One goes up, one goes down. So you can't say, well, it's not that the dollar is weak. It's that these other currencies are strong, right? It is the same thing, right? I mean, you could think of all kinds of examples that would show you how idiotic this is. And Bessent has got to know that. I mean, he's a smart guy. He's come from Wall Street. He knows it's 6 of one, a half dozen of the other. I mean, if the euro is strong, the dollar is weakening against the euro, right? And we have a weak dollar because we need more dollars to buy euros. Yes, the Europeans have a strong euro because they can buy more dollars with their euros. But from the perspective of America, we have a weak dollar. Now, it's not weak in the absolute sense because it's still overvalued relative to these currencies. It's going to fall a lot more. But what also exposes what Bessent said is a lie. Last week, yes, the dollar went down 2% against a basket of currencies, but gold was up 5.25%. So what does that tell you? We don't have a strong euro. We don't have a strong yen. They're weak. All of those currencies lost value last week against gold. So nobody has a strong currency. Every currency in the world is weak. They are all losing purchasing power. Gold tells you that. Now, since the dollar is down more, right? So in terms of the euro, gold was only up 3% on the week, right? It was up 5% in terms of gold because the dollar lost more value last week than the euro. So the euro was weak. The dollar was even weaker. So that really exposes in a bigger way the absurdity of the spin that Scott Bessent was trying to put on this by saying we have a strong euro. We don't. We have a weak euro. It's just that we have an even weaker dollar. So on a relative basis, yes, it looks like the euro is going up. But again, it's like if you got two cars and one car is going backwards at 10 miles an hour and the other car is going backwards at 20 miles an hour, from the vantage point of the car that's going backwards at 20 miles an hour, the car that's going backwards at 10 miles an hour appears to be going forwards. But it's not going forwards. It's just going backwards more slowly. And so all these currencies are weakening. But I know Scott Bessent, how does he even say this stuff? He knows that he's full of shit, yet he has to do it anyway. See, maybe Trump doesn't realize that he's full of shit, but Bessent does, right? He's a Wall Street guy. So they've got to say this just to support Trump, just like when they asked him about this budget, the big, beautiful budget, and he has to back it. He has to say how it's good. He can't possibly believe that this is a good deal, that this is going to help the economy. I mean, if he believes that, he's not nearly as smart as everybody claims he is, right? Or maybe he should be. I think he's probably one of the few guys that's there that knows that he's full of it. Now maybe he's saying stuff to the president behind the scenes, right? Maybe he's a yes man in the public, but maybe behind the scenes he's trying to get Trump to understand stuff. Maybe that's why he's had some of his about faces. Maybe it was Bessent saying something to him in private that he doesn't want to say in public because it would damage Trump's ego for his Treasury Secretary to be publicly critical of something he's doing. But what he should be doing privately when no one's around is telling his boss that he's completely wrong. Now, again, I don't know how that goes over with Trump. I don't know how Trump responds to people telling him that he's wrong and he's making a mistake. I don't know. Because if you're a good leader, right, you want people who you think are smart, who you've appointed to positions, right? If they disagree with you, you don't want them to keep quiet because maybe they're right. Maybe you're wrong, right? I mean, this is not, Trump's area of expertise, right? What did he do? He did deals in real estate, right? He built hotels, he's not, a financier, an expert in some of this stuff. He was an entertainer. He produced The Apprentice, right? He's in show business, right? So, he may want to defer to Scott Bessent. He's a little bit more knowledgeable when it comes to some of this stuff. So you would want a guy to speak up, not just keep quiet. He knows you're making a mistake and he just bites his tongue because he's afraid at the way you're going to react to being told that you're doing something wrong. So I don't know. I don't know Trump. I don't know how he reacts behind the scenes, but I do see a lot of this erratic behavior and inconsistencies in policy. But anyway, the bottom line is Walmart's got to raise prices. Everybody's got to raise prices. And as Trump realizes this, right, maybe that's what's happening. He realizes that it's not external revenue. It's internal revenue, that the people who pay the tariffs are the American consumers, especially with the weakness in the dollar. Because remember, one of the things that a lot of these so-called experts were saying was that the tariffs were going to strengthen the dollar, and the stronger dollar was going to help offset the tariffs because we were going to be able to import cheaper because of the strong dollar. Well, it's actually had the opposite effect, which is what I was forecasting. So now, not only do consumers have to pay the tariffs, but they have to pay more to buy the goods because the dollar went down. So all the imports now cost more dollars to import, and now even more because you have to pay the tariff. So it's not a strong dollar offsetting the tariffs. It's a weak dollar that is magnifying the tariffs. Now, Another thing that happened this week, Trump posted on, Truth Social, that he's seriously considering taking Fannie Mae and Freddie Mac public, which I thought everybody knew he was considering it, but apparently not, because Fannie Mae was up 50% on the news, and Freddie Mac, I think, 40%. But it really wasn't any news. I mean, because they've been talking about this since before Trump was elected, that they were considering this. In fact, a lot of the people that backed Trump's campaign, that gave a lot of money to his campaign, are the biggest holders of Fannie and Freddie stock. And they're making a ton of money right now on speculation that these companies are going to be privatized. Now, if Trump really cared about the country or understood what's good for the country, the last thing he would do would be to resurrect these monstrosities. They need to be put out of their misery. We need to get rid of Fannie Mae and Freddie Mac. They never should have been created in the first place. So we should get rid of them. But of course, if we got rid of them, then mortgage rates would go up, which they should. But the president doesn't want that. And I was watching an interview with Scott Bassett, and he was asked about, hey, are we going to privatize Fannie and Freddie? And he said, well, it's something that we're considering, but we want to make sure that if we do it, that mortgage rates go down, that the spread between mortgage rates and treasuries goes down. Well, that's impossible. Anything they do to take Fannie and Freddie out of receivership, even if they recapitalize them and release them as private companies, mortgage rates are going up, because right now they enjoy a 100% explicit U.S. government guarantee. They are being operated by the U.S. government in receivership. The U.S. government owns them. And so everybody knows that the U.S. government stands behind this debt. This is the best guarantee they're ever going to have. Anything they do to privatize them is a step down. So it has to result in higher mortgage rates. Now, if they try to take Fannie and Freddie public with no government guarantees whatsoever, no backstops, which would be the only way that I would want to do it, it's not going to work. No one's going to buy them, right? Because the only value that Fannie and Freddie have to sell is the government guarantee. That's what they had. Even though before it was only implicit, the markets believed it. And so that was their advantage, that they had the government co-signing all their liabilities. So if you reprivatize them, how do you do that? You can't bring back the implicit guarantee. That's impossible. So you either have to make it explicit or you don't have one at all. You got to make it clear in the prospectus what's going on. Now, I think what they're contemplating is, well, maybe we'll let Fannie and Freddie buy some kind of government backstop. We'll make them put up some money, but then buy some government reinsurance, which of course means that the new Fannie and Freddie will be less profitable, because now they're going to have to buy what they used to get for free. And of course, if they accurately priced it, it would probably wipe out all their profits. And of course, before these companies can go public, they have to raise hundreds of billions probably in capital. So that means they have to find investors who want to put this capital up and take on all this risk, which, we're going to have a housing crisis. We have, very high housing prices. Now the market is starting to roll over. Sales are collapsing. Mortgage rates are rising. We're going to have a drop in home prices. We're going to have a pickup in defaults. And that means all of a sudden there's going to start to be a lot of losses for Freddie and Fannie. So they're going to have a lot of capital to absorb those losses. Who's going to really want to put that up? But also, if the U.S. government is going to allow Fannie and Freddie to buy insurance, government insurance, why can't other banks buy it? I mean, how can they say these two private companies have the ability to buy this government backstop, but Citibank can't buy it? JP Morgan can't buy it. Bank of America can't buy it. Why can't they? And so if the government has to make that guarantee available to everybody, well, then there goes their duopoly. And in fact, I don't even think Fannie and Freddie in a fair market could compete with these other financial institutions, so they'd be out of business. So I think that it's really a bunch of talk. I think the way Trump backers are making a lot of money off their Fannie and Freddie bets is to get Trump to put out these kind of posts to manipulate the market. I mean, why bother? I mean, why say you're seriously thinking about it? Do it or not. I think that, hey, we're not going to do it, but we'll put out a post that makes it look like we do it. So a bunch of people will buy the stock, and my buddies who already own the stock can make a lot of money. I mean, I think that's what's going on here. That may go on every time he posts about a tariff, right? People know. Before, I think the same thing happened with his meme coins, right? People had advance warning and they were able to make a lot of money. There's no insider trading law on crypto. And besides, who's going to prosecute it? The SEC is not going to prosecute it, right? They're letting everybody get away with this stuff. But that's another thing I want to talk about to finish this podcast. Oh, and before I do, I meant to say this earlier, but I'm leaving tomorrow. I'm going to be at the Bitcoin conference. I'm not sure how many of my podcast audience I'll see there, but maybe there's a few of you who, against my judgment, are buying Bitcoin. So maybe you'll be at the conference. I can't imagine too many people like me will be there. I mean, I might be the only one there that doesn't have any Bitcoin. But if you're there, we'll have a booth and I'll see you there. By the way, I read that half of the people that own Bitcoin, about half, are Americans. We're half the Bitcoin owners. And we collectively own about 40% of all the Bitcoin in the world, which is proof that the idea that Bitcoin is really a monetary instrument for the unbanked, that it's used in poorer countries where they have weak currencies. And so they're using Bitcoin as money and they're buying things. That's all nonsense. The country that has the most Bitcoin is the country that doesn't need it, right? We've got sophisticated banking systems. Supposedly we've had a sound currency, which we don't, but people think we do. So why is so much of the world's Bitcoin owned by Americans? Because we're the ones gambling on it, because we've got a Bitcoin president, because our government is pushing us into Bitcoin. So the rest of the world is getting rid of their Bitcoin and Americans are buying it, right? So the world is doing something smart. We're doing something dumb. The world is investing productively and we're squandering our money on crypto. And, this is going to be a huge a showcase of that at this Bitcoin conference, which is going to have better than 30,000 people there. When I go to the gold conference in New Orleans later in the year in October, November, maybe there'll be 500-600 people there, maybe 700 now because gold's done so well. But it's tiny compared to the number of people that go to Bitcoin. But I'm going to be at the Bitcoin conference. And then a couple of weeks after that, I'm going to be at Freedom Fest in Palm Springs. That conference is more to my liking. I mean, there's going to be some Bitcoin fans there, but you really should go to Freedom Fest in Palm Springs. That's June 11th to the 14th. You can sign up at freedomfest.com. And then towards the end of June, I'm going to be speaking. I'm going to be spending the week with the Real Estate Guys Summit at Sea, June 20th through the 29th. And we've gone on that cruise quite a few times. In fact, I got my whole family coming on it. My wife, who's going to be having her birthday on that cruise, so you can help us celebrate that. My two kids are going to be there. But who's there? Robert Kiyosaki, George Gammon, Mike Maloney, Ken McElroy, Brent Johnson, Brian London. So a lot of good guys, and you can spend the week with them. If you do sign up, I found out they got 3 cabins left. So that's it. So only 3 more people can sign up. 2 of those cabins are outside cabins with balconies. One of them is inside, but that's it. But if you do sign up, make sure and tell them that, you heard it from me, because they'll make sure to seat you at my dining table at least one night. The people move around. And I got one little special offer. If you sign up and you happen to be in the San Francisco area, because I am flying, because after the Palm Springs conference, I'm flying up to San Francisco to visit my son, Spencer, who now lives there. He graduated college, Boston University, and now he's in San Francisco. So we're going to go visit him, but then we're going to fly from San Francisco to Miami for the conference. There's a land portion, and then there's the cruise. So we're going to fly San Francisco to Miami. And if anybody, because I already checked and there's no one coming to the conference from the Bay Area. But if you happen to be in the Bay Area and you want to come, I got extra seats on my plane and I'll give you a ride. It's a one-way trip. So you got to go commercial on the way back, but you can fly with us on the way there. By the way, I don't own my own plane. I mean, maybe if I had bought Bitcoin when I first heard about it, I'd be that high a roller. Now I got a fraction of a plane through NetJet. I've been using that for a few years, and I fly them most of the time. And I like the service. It's expensive, but I'm old. I can't take it with me, so I've been using it. But if you want to take advantage of it, you can hop on and come down to Miami with us for the Summit at Sea. So June 20th through the 29th. Anyway, so the other thing I wanted to talk about is, the other things that are just really making me angry with Trump and the way he's just, using the presidency for his personal gain. And I don't like it on so many different levels, but it really discredits a lot of what he wants to do. But also I mentioned too on the plane, on the $400 million plane that he got from Qatar. And he's claiming, look, it's not a gift to me, right? It's a gift to the American government, to the Army, which is pure nonsense because it's not a gift to the U.S. government. If it was a gift to the U.S. government would own the plane. U.S. government doesn't own the plane. It just gets to use the plane until Trump leaves office, in which case the plane goes to his library. If it was the government would get to keep it. They could sell it, they could use it, but they can't. It's only for Trump's use until he leaves office. But Trump made a big deal and said, hey, I'd be an idiot, not to accept this gift, right? We're getting a free plane. Why not take it, right? The Democrats want me to pay for it. No, the correct thing to do is turn it down because we don't need it. We've got two brand new Air Force Ones being built by Boeing. Yes, they're late, but the first one is supposed to be delivered now in 2027 and the other one in 2028. So in 2 more years, Trump's going to get a brand new Air Force One, state of the art, that he can use. In the meantime, we've already got 2 Air Force Ones right now, the same ones he was on when he was president before, the same ones that flew Biden around for 4 years. They work well. Yes, they're a little older, 1990, right? They're not as prestigious. They're not a flying palace, but they'll do. They're not that shabby. I know. I mean, I've never flown on them, but I'm sure, they're not bad. But Donald Trump doesn't want to wait 2 years for the new one. He wants to force U.S. taxpayers to spend tens of millions of dollars retrofitting this luxury plane, this flying palace. It's going to cost tens of millions of dollars. I don't even know how long it's going to take. Fortifying it with the new communication stuff, the defense mechanisms, the reinforcing the plane, right? They have to do all the stuff that the other planes that we already have, right? So we got perfectly fine 2 Air Force Ones. We got 2 new ones on order, but Trump can't wait, right? Trump doesn't want to fly on the ones we've got waiting for the new ones. So he wants to take this gift and make the U.S. taxpayer spend all this money retrofitting his plane, right? It's not like we own the plane after we make all these improvements. No, all these improvements belong to Trump, right? When he takes the plane to his library. Now, he claims when he takes it to his library, it's just going to be parked in the parking lot. But who knows? I mean, what's going to stop him from using it? Nobody can stop him, right? He can do whatever he wants with it. Doesn't matter what he says now. He can do whatever he wants with it later. Just like it didn't matter that Joe Biden said he wasn't going to pardon his son Hunter, right? He pardoned him. Doesn't matter what he said. He can do whatever he wants. Trump can say whatever he wants now. Oh, we're just going to leave it in the parking lot. I'm never going to actually fly it. Of course he's going to fly it. But forgetting about that point, it is a personal gift. But it's actually getting worse. I already talked about the club that his kids came up with, the executive branch, $500,000 to join. Who knows what the dues are? What do you get? Access, perks. You get to have drinks with the cabinet, right? All kinds of things. Well, during the week, there was a presidential dinner in Washington, D.C., and the presidential dinner was for the first top 100 or something buyers of his meme coin. So if you spend enough money, and I think the average person who was at this dinner, I think it was $1 million spent on Trump coin. They got to have dinner with the president. And the top 20 guys got like tours of the White House. So in other words, Donald Trump is selling White House tours, but putting the money in his own pocket. I mean, yes, he's not selling the tours. He's saying, buy my meme coin where I get the money. And if you buy a lot of my meme coin, I'll give you a tour of the White House. I mean, he doesn't own the White House. The White House belongs to the American people. He doesn't get to charge to give people tours of the White House. First of all, it cheapens the White House, but that is what he's doing. You know, and it was ridiculous because I was listening to a press conference and the president's press secretary said, oh, you know, this is not a conflict because he's not going there as president. He's going there on his time off, right? So he's going there as Donald Trump, the individual, not Donald Trump, the president, which is ridiculous because Donald Trump, the individual, is always the president. During his term of office, even if he's on vacation, he is the president of the United States. You can't separate the man from the presidency. And people are paying money for access to the president. You know, it's one thing if it's a campaign dinner and the money is going to, you know, the campaign. It's another thing when people are directly putting money into Trump's pocket, even if it's indirectly through the Trump coin. And by the way, Trump doesn't just make money when you buy these coins from him, but every time the coins trade from one person to another, he makes more money. I mean, I've read he's made like a few $100 million already off this coin. I mean, people think, oh, Trump's not making any money, like he's given up his salary. What does he care about that $400,000 salary? He's making billions. He's cleaning up as president. You know, this big trip to the Middle East, right, where he got the plane. And Trump is talking about all the money that is being invested in America by these Gulf nations. Yes, a lot of it is going into his own companies, his family hedge fund, his family crypto business. Trump businesses in which Trump has a direct interest, right, received billions of dollars from the Qatar government, from the Saudi government, billions to the Trumps. I mean, so it's almost like this trip was more of a business trip. It's like, why did Donald Trump, why was his first trip? Why did he go there? Because he was raising money for his business ventures. Now, yes, he got some money for Boeing as well, and okay, but he got a lot of money for himself. None of this should be happening because what are these other countries getting? If the Saudi government is dumping a couple of $1 billion into Jared Kushner's hedge fund, where he, you know, what are they getting for that? You know, I mean, there is so much wrong with this. And, you know, it not only was it just unconstitutional to take a gift, right? Because the Constitution says if the president is going to get a gift from a foreign country, Congress has got to approve it. Congress didn't approve this. But the bottom line is, you know, none of this looks good. It's not good. And it really destroys the narrative that, you know, Trump is just there out of patriotism, that he's not there to make money, that he's sacrificing making money for the good of the country. No, he's exploiting the presidency to make more money than he ever made in the private sector. Now, look, Trump did get a rotten deal. I think he probably lost money the first time he was president, you know, because of, you know, a lot of stuff that happened. And he was certainly treated horribly after he left office. Nobody defended Trump more than I did in the public. Nobody was a bigger critic of the lawfare against Donald Trump. I was very consistent on my podcast about why all this stuff was wrong. I was calling BS on insurrection and how they spun that, right? So I was a big defender of Trump, and he got a really raw deal, and he was treated horribly. You know, nobody is above the law, but nobody is beneath the law either. And Donald Trump was charged and prosecuted for things that no normal citizen would be prosecuted for if they did the exact same thing. So that was wrong. But two wrongs don't make a right. Yes, Trump has a right to be pissed, but this is not how to get even, right? Just because he can't be thinking, well, I'm just going to, you know, make as much money as I can from this office because I feel like I got screwed. So now I'm going to use the presidency. Now I'm going to exploit the presidency. That's not the way to do it, because what you're doing now is you're even lowering the bar for the next president, right? And you become a hypocrite. And all the people, and this is what really bothers me, all the people who were criticizing Biden and Hunter Biden, and I was one of them. I was very critical of the shell companies and the money laundering and the way the Bidens hid the fact that they exploited their father's influence and were peddling his influence around the world while Biden was vice president. Well, what the Trumps are doing is worse. The only difference is they're out in the open about it. They don't even have the decency to hide it through shell companies. They're just doing it right out. And they're thinking because, it's in our faces and they're so open with it that somehow it's okay, right? Maybe that's their strategy. Like, hey, we're not gonna do it in a dark room. We're gonna do it right in the light of day and say there's nothing wrong with it. And of course, we have no idea the things that are happening in the back room, right? Because if they're willing to let us see all this stuff, imagine the stuff that we don't know about, right? That's not out in the open, that is being done in the back rooms. But the fact that there's so much out in the open, just imagine how much more is going on, that we can't see. But you are a hypocrite if you are critical of Joe Biden and Hunter, but you're defending Donald Trump. And people now, you go on my X and I'm pointing this stuff out, and they're saying, "Oh, Peter, you've got Trump derangement syndrome." No, I don't. They've got Trump derangement syndrome in reverse. It works both ways, right? If you think Donald Trump can't do anything right, then you have Trump derangement syndrome. But if you think he can't do anything wrong, then you suffer from the same ailment, right? So a lot of people are too blind, right? They just think, Trump is, the second coming or the third coming or whatever, wherever we're at on comings. But no, he's doing a lot of stuff that's wrong. Has he done some stuff good? Has he done some stuff good on the border? Sure. Has he done some stuff good on DEI and on a lot of this woke nonsense that was going on? Yes, absolutely. So he's done some stuff, but the most important stuff he hasn't delivered, right? He's not cutting government spending. He's not doing the things that need to be done to make America great again. He's not making any of the hard choices that need to be made. He's just trying to be Santa Claus, right? He's just giving away money to everybody, right? In fact, when they were negotiating the big, beautiful deal, apparently Trump told some Republicans, stay the F away from Medicaid. And he didn't say F. He said the whole curse word, right? I'm trying to keep it clean on this family podcast. What do you mean, stay the F away from Medicaid? When Medicaid and Medicare, because they were passed on the same bill in the early 1960s, I think it was 62 or 64, but they passed them both together. It was over Republican opposition. The majority of Republicans voted against Medicaid and Medicare. Now the Republican president is telling the Republicans, stay the F away from Medicaid. Don't make any cuts, right? I mean, what happened to the, Barry Goldwater wing of the Republican Party? And by the way, Ronald Reagan was against it too, right? Of course, he couldn't do anything about it back then, but he was against Medicare and Medicaid. I mean, any principled conservative, anybody who cares about the Constitution was opposed to Medicaid and Medicare. The problem is, once the public gets something, nobody wants to take it away. Even the people who opposed it, the people who were against giving Medicaid, once people had it, they didn't want to take it away. The same thing happened with Obamacare, right? A lot of Republicans were against Obamacare, but the minute people had Obamacare, those same Republicans didn't want to take it away, right? That's the problem. You create these programs and they live forever, because it's one thing to tell somebody they can't have something they don't have. It's another thing to take away something they do have. And none of these vote-seeking Republicans, there's just a couple of Republicans that have any principles, any courage. And of course, what is Donald Trump doing to these Republicans that have the courage to stand up for fiscal responsibility? He's saying they're grandstanders. Get rid of them. Let's drum them out of the Republican Party. Yeah, and get rid of the last remaining vestige of fiscal responsibility. We need more people like Justin Amash. We need more people in the Senate like Rand Paul, right? The grandstanders, we need a whole Congress full of these grandstanders. The problem is we got a Congress of ass kissers. And because of that, we are headed for a currency crisis. We are headed for a dollar crisis, and a lot sooner probably than people think. So what you got to do, is load up on gold and silver and platinum, call up Schiff Gold, get into the accounts at Europe Pacific Asset Management. You got to get into foreign equities, value stocks, dividend paying stocks. You got to get out of these overpriced dollar denominated US stocks. I think they're going to underperform for years and years and years. We're still early. This is a major transition year, 2025. 2024 was the breakout year for gold. 2025 is the breakout year for foreign equities. And we've got the portfolios that are positioned to ride this wave. And I think the wave is going to be huge. And so go to Europac.com, check out, talk to the representatives, look at my mutual funds. You can read all about my mutual funds on the website at Europac.com. But get yourself positioned. This ship is going down, but I mean, you don't have to sink your portfolio with it, right? You could abandon ship and you can position yourself to profit when most other Americans are going to suffer financially. Anyway, that's it. Again, I'm leaving Puerto Rico. I'll see some of you in Vegas. Hopefully, I'll see some of you in Palm Springs at Freedom Fest, and maybe a few of you at the Summit at Sea with the real estate guys. In the meantime, if you like the video, make sure and leave a comment, give it a thumbs up. And again, don't forget, Schiff Sovereign, you got to be a subscriber. If you haven't taken the time to go to schiffsovereign.com, give us your email address, make sure you're getting our free newsletters, and better yet, give the paid service a try. It's not expensive, but there's a lot of value. There's a lot of value in the free service, but there's even more value in the paid service. Bye for now.